there. I'm opening the show today. Welcome. It's Friday. I'm in a good mood. I'm not tired. There's not a lot going on. Let's do this thing. Why not? Here with my three best friends. We're the Hash. We're going to make this happen. All right. What am I looking at today? I'm tossing it straight to you, Naomi. What is going on? What happened last night? A lot of stuff happened.
So much has happened. So you have every reason to be excited today for Friday, Zach, because we saw Bitcoin climb past $60,000 for the first time in 6 months. And that is on news that potentially the SEC may not block all the ETFs that they're currently deciding on, that currently have proposals in at the moment. So let's take a few back steps here. ETFs. Right? These things that we've been hearing about for years and years and years and years and years and years, that people keep putting in these proposals, and then the SEC keeps coming back and saying, actually, no, you need to change this thing, you need to edit this thing, you need to remove your application, all of this. The way that these filings work is that an ETF application automatically goes through if the SEC doesn't have any qualms with it. So, for example, if they don't have, any suggested changes to make, or if they don't ask them to directly pull the filing. So there was a report in Bloomberg that says that out of all the ETF filings that are coming up to deadlines for when the SEC has to decide either way whether they want changes, there are potentially at least some that Bloomberg expects the SEC will not block. So on that news, Bitcoin just skyrocketed and we pushed past 60K. There have also been some false reports about the SEC going ahead and actually approving something. That has not happened yet. Their deadline has not passed, and the SEC doesn't just approve ETFs. But it is still exciting news. I'm going to throw this straight to you, Will, for your thoughts on all of this. Is Bloomberg right? Are we going to see an ETF finally allowed to launch?
I'm not an ETF whisperer, so I will not confirm one way or the other.
Really,
but it does
Will?
look pretty good. Yeah, believe it or not, do not have that much expertise. I'll boot it up to Zach here in a second, but I will say that it is wild to see the predictions come true from this year about Bitcoin's price, whether that be like the sell-off in May, comeback September is going to be really rough. October, you're going to see a big price bump. And then maybe going into Christmas, you have like a really higher push with price just based on this speculation around ETFs being approved. That happens, like that's pretty impressive. Crystal balls out there. That's pretty amazing to me. Zach, I want to get your thoughts though, because there is a lot of nuance with this subject.
There's a lot of nuance. This is potentially a big deal, right? So this is a flavor of ETF known as the Bitcoin Futures ETF. This is not based on the spot market price of Bitcoin, which had been what a lot of people have been trying for a long time to get across the line. I think it was like 2013 or 2014 that the Winklevi filed like maybe the first Bitcoin ETF application. So the crypto industry is right to be excited about what appears to be a major milestone within reach. And this is what's happening, but with a couple of modifications, right? Gary Gensler signaled that he liked a Bitcoin futures ETF over a Bitcoin spot market ETF, and a Bitcoin futures ETF application boom followed. And what is being signaled in this report from Bloomberg as of last night is that one or more of these Bitcoin futures ETF products will get the green light from US regulators, which will be a first for any Bitcoin-related ETF after many years and dozens of applications had tried to get across the finish line. So to see a little bit of euphoria in the market makes sense. That this is happening. That this is a key stamp of approval from U.S. regulators at a time when regulation and crackdown seems to be the big conversation point. So for this to occur last night, based on sources, for this to potentially be in the process of becoming real is certainly significant, and the market is responding accordingly. I don't know if anyone here thought that this was going to be the year for this to happen, just given recent comments and sentiment out of the SEC. But it appears as though we may have gotten that one wrong, and this could happen imminently. So certainly something that we're watching closely over here in the newsroom, and it's something that we're going to be following today, over the weekend, and probably early next week. Jen, I'm going to toss it up to you, though, for your thoughts.
Yeah, this is such an exciting way to start Friday. I mean, I didn't think it was going to happen before the end of the year. But Zach, to your point, when Gensler made those comments about him favoring a futures ETF, I thought maybe something might be coming down the pipeline. And here we are. I wanted to read something from the Bloomberg report. So it cited people familiar with the matter saying that proposals by ProShares and Invesco are based on futures contracts that were filed under mutual fund rules that Gensler has said provide significant investor protections. So we're back to those significant investor protections. And I'm just wondering what kind of investor protections could one ETF offer over another? I would assume that a lot of the protections that people are talking about are very similar, but I don't know, Naomi, if you have more information or insight into that.
So the reason a lot of people think that Gensler is favoring a Bitcoin futures ETF over a normal one is the idea of what is approved SEC custody of Bitcoin. Now, a lot of futures contracts are often settled in cash and not in Bitcoin. And that is the case with a lot of the filings that have been put forward. They're futures contracts, so they'll be settled in cash. And there's a big difference between custodying cash in a way that's approved by the SEC and the SEC putting out guidelines to determine what actual approved custody of Bitcoin looks like, which they haven't really provided any guidance for. So the fact that they haven't really figured that out, it suggests that these consumer protections might fall in line of like, how is that money, how is that asset that's actually backing that ETF being stored? Is it approved by the SEC? Now, they haven't, in true SEC style, they haven't provided any guidance that actually lays out as much, but this is just speculation about why they might be moving towards one rather than another. But Zach, I'll throw it back to you.
Yeah, so I think you're absolutely right. I mean, the futures market is far more regulated in the crypto space. You see these big players who sort of exist within existing frameworks, and I think that was something that, in terms of consumer protection, was important for Jay Clayton and for Gary Gensler, the former chair and the current chair of the SEC. Interesting to see this unfold. I think there's just going to be a lot of attention on this. We saw an incremental update this morning indicating that the Nasdaq had approved the listing of one of these potential Bitcoin futures ETFs that might get the green light. So there does seem to be sort of incremental progress and a lot of work being done behind the scenes to make sure that this gets the full green light sometime in the near future. But as it stands right now, we don't know when that's going to be, but we're certainly watching the SEC website closely for any additional documents that are coming out.
You guys will finally know what it feels like to be in Canada.
Whoa.
Low blow,
Jen. Sorry.
I do have a question for Naomi really quickly. Gary Gensler came into office and a lot of people were very excited for him to be in that position. And then quickly, I think people realized that they weren't going to get what they first expected. And now we're seeing some Bitcoin products maybe get approved. And if these do go through, it kind of sets a tone. I feel that Bitcoin is okay in SEC's purview and maybe some of these other crypto tokens are not. What would your take be on the SEC kind of picking winners and losers on that front?
Yeah, it's definitely not the SEC's role to pick winners and losers. Hester Peirce has spoken extensively on that and pushed back against decisions that the SEC chair has actually made, or the SEC in general, I should say, has made. She has said in the past, the SEC's role is to make sure that the products out there have appropriate transparency and consumer protections, but it is not their role to decide, which products are allowed and which products are not. Just, making sure that they all have appropriate transparency associated. So I think it's terrible that the SEC has basically found a loophole in this. And if they have a way to stop a crypto product, they're stopping it, whether it's through cease and desists, or whether it's through attacking them with lawsuits, or whether it's through asking for changes in Bitcoin ETFs or whatever. Like they're really finding ways to shut down areas of the crypto economy. If this Bitcoin ETF goes through, yes, I think you're right. It does signal that some products are not like others, and that is the SEC overstepping. It's really not their role to be doing that. But on that cheery note of government overreach, which we love to talk about, let's change track and go to ransomware. Will, what's going on in that world?
Another one of our favorite topics.
Yeah.
Totally. We're staying in the realm of consumer protection, of course. So payments tied to ransomware attacks in 2021 are exceeding 2020's total by a decent amount. According to FinCen, which is the Financial Crimes Enforcement Network, the first half of 2021 outstripped 2020's numbers by quite a bit. 2020 saw about $416 million tied up in this like illegal activity they're tying to it, and then 5.2 billion was tied to crypto transactions through the FinCen's kind of internal reporting. How they do this is through suspicious activity reports, or SARs as they're called them. Nick Day wrote a great article kind of digging through what this means and what it means for the crypto industry. Of course, we've seen top down, this has been a concern for a lot of regulators in this space. The Biden administration has been big on this, and it's kind of brought Bitcoin and other cryptocurrencies into the purview of other regulatory bodies within the federal government, because they're looking at the ability to use these new tools as ransomware. And it's a pretty interesting angle for the federal government to be getting involved in crypto for the first time. Over the last few years, we've seen consumer protections be a big thing, but now ransomware adds a whole new angle to that. Kind of ties into, well, many other points that we could get into later. But Zach, I want to throw this story first of all to you, because this is a big number that they updated with.
Yeah, expect to see this number cited in many a congressional testimony going forward. I think this is a key data point that's going to be cited quite often. I think there's a lot of interesting stuff in here. Obviously, I think I think there's a nice little note from the Treasury Department saying that Monero is seeing a bump here. So bullish for Monero, the anonymity enhancing privacy coin known as Monero, or XMR, is becoming more favored in ransomware payments as opposed to the more traceable and trackable Bitcoin. So interesting to see this sort of industry, actually, this black market evolve, and also interesting to see some data emerging on how this is a growing sort of subsector of the crypto universe. And I think, again, as we hear Bitcoin ransomware being linked more closely in regulators' minds, not regulators' minds, I should say, more like lawmakers' minds, I think this is going to be a data point that's going to be trotted out often. So get used to this report and, read up on the facts and figures on this one, because I think, again, we're going to be hearing a lot of it going forward.
Yeah, just to grab and fact check myself really quick there. So $590 million in payments were tied to ransomware in this year so far. Of course, the year isn't over. And then last year is $416 million were tied to crypto payments that were themselves ransom attacks. And then the $5.2 billion number I noted earlier was tied to FinCen's reports on suspicious activity reports. So that's kind of like a larger bucket of reports and transactions that FinCen's looking at and saying, like, these might be something we need to be wary of. But that $516 million number is the thing, or $590 million rather, is the number to look at. Amy, I want to throw this over to you, because go ahead.
Actually, Will, you might know this. You might have dug into this a little bit, but is that price adjusted? I'm actually curious about that now. I'm wondering if that just represents the growth in the value of some of these assets that are being slung about.
That would be a very
like, maybe it's not a growing subsector, right? Like maybe it's like flat, but price is up. So like, hey, the first half, and this was for the first half of 2021. Hey, that's a bigger number than it was in 2020. I don't know. Is it price adjusted? I'm gonna have to do some fact checking and get back to you later.
Let's get Nick on this. You get Nick on the show.
Nick.
Yeah.
Sorry.
Well,
Naomi,
I was going to say that I had a similar question, actually, Zach, to you. It's also the idea that crypto is more pervasive across the whole economy. So if ransomware takes up a certain percentage of that economy and crypto is growing in total, then we're going to see ransomware grow as well. But I also wanted to just quickly talk about the two ways that the government could be tackling this. One of them is to make it illegal for people to pay ransomware, which doesn't protect the companies at all. It's sort of this double speak where they're like, oh, we are really concerned with companies, getting their data frozen and not being able to access it and having to pay this money. So we're going to protect them by not allowing them to pay the money that would allow them to get their data unfrozen. So it's not going to help these companies at all. The idea is that it would, disincentivize people down the road and less of this stuff would happen. But it's really hurting the people who are getting, targeted with this in the first place. The other way is much smarter, which is to go on a campaign to encourage people to increase their security, their digital security. This is something that the government never talks about. They're always talking about how things are too private, how encryption is really bad, bad, and we got to stop encryption because it helps terrorists. How no one should have privacy on the internet, and we should have ever more backdoors installed in things. This is directly attributing, this is directly leading to an increase in these ransomware attacks, because if no one is talking about why digital security is important, why they should be focused on protecting their machines, they're not going to do it. Instead, the government is attacking this encryption, attacking and weakening people's systems, and more of this stuff happens. We need to really start educating people about why it's so important to have robust security on their systems and how to protect themselves. This is how we actually, help people and protect their data. But Jen, I saw your hand go up as well, so I'll throw to you.
Yeah, you kind of stole my idea and you articulated it so much better than I would have. I'm just so frustrated by the growing connection between crypto and ransomware. Just like you were saying, Naomi, ransomware is a completely separate thing from crypto. Yes, crypto is used in ransomware attacks, but if we address what's happening with ransomware, if we can educate companies on how to keep their data safe, which obviously they are not doing. We're seeing so many data breaches. Privacy policies are so complicated and convoluted. If there was an interest in providing that education, I think we could really eradicate some of these problems that we're reading about in these articles, but I don't think there is an interest. I'll throw it back to you, Will.
Yeah, just that tweet from the Missouri governor the other day, I think you guys might have seen it, it's quickly becoming a meme, where he reported and accused a journalist of being a hacker for going to the back end of a website and pulling out a bunch of social security numbers that the government's office I think it was like a local school that had this set up, and they weren't protecting any of their employees' social security numbers because they didn't know how to. They didn't have it set up correctly. And the journalist literally had to press one key on his keyboard, and all the information for all these employees was just revealed right there. And the governor turned around and accused this journalist of being a hacker and said, like, you have attacked the state and embarrassed us. And I think that's a very good picture of the two worlds are colliding right now. We have stable coins and crypto and Shiba Inu tokens. And then you have this old world that's still operating on the fax system. And at some point there's going to be a collision. Naomi, I'll throw it to you.
Yeah, and there was another big story that came out. So Matthew Green, a very famous cryptographer, is the one who worked on the Zcash white paper. He's just very involved in crypto, but in cryptography side of things. So he wrote that Twitter is being sued over the Saudi spies that they hired in customer service and SRE roles, the one who used their access to collect information on Saudi dissidents. So this goes to speak to, you have all these social media platforms who've been trying to add end-to-end encryption to their messaging services for a long time, and the government has been systematically pushing back. Facebook tried to implement this years ago, and the government said, whoa, 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 you cannot encrypt your messages. This is a great example of why it's important. They were saying, it doesn't matter as long as we protect it and this information stays within the company. That's all we really need. We don't need end-to-end encryption. This is an exact case of why we do need end-to-end encryption, because Saudi dissidents, were attacked and targeted by the government because Saudi spies were allowed to just see all the stuff on the back end. So we really need to be protecting this data. But on that cheery note, let's go to a break. And Zach, you'll tell us what's coming up next.
I will indeed. There's so much going on. There's Bitcoin over 60K. There's CFTC talking about Tether. But you know what? We're also going to make some room to talk about the Shiba Inu coin. We're going to talk SHIB, SHIB Army, and what makes that thing so resilient. Stick with us. We're taking a break. We'll be right back. It's The Hash. Happy Friday, too. All right. Thanks. Hey there, welcome back to The Hash. It's a busy day, and this morning the CFTC, the Commodity Futures Trading Commission, made some big headlines when it said that it was fining stablecoin issuer Tether for over $42 million. The essential claim here is that the USDT stablecoin, of which there are $69 billion worth of circulation currently, was not being fully backed at all times. This is a fine. Maybe not a big fine in the grand scheme of things, but it's certainly a notable action against a very prominent player within the crypto space. So I'm going to throw this to Will for his initial thoughts, and then we will get this thing going. Will, what do you think about this CFTC action against Tether?
This goes back to a conversation we had, I think, earlier this week or last week, talking about potential movement against Celsius, and that's why they raised a bunch of funds. And I was thinking, what if Celsius gets slapped with a fine? Like, what's the worst thing that happens to them? Like, they lose $30 million, $50 million. They keep doing business as usual. See, that's what happened here with Tether. They get slapped with a fine. This is one of the oldest stories in crypto. Is Tether backed? Is it not backed? People have gone around the circus just for ages, made a career out of it, and kind of ends here, right? With just this Tether case right here, $42.5 million, gets slapped with a fine, keep doing business as usual. It's interesting also to look at Tether's statement afterwards. They said this inquiry arose during a markedly different time in our ecosystem and focused on the same types of challenges that many in our industry faced at that time. As many companies around the world do, Tether agreed to resolve the matter in order to move forward and focus on the future. So I think it's just that, like, now it's done. Now that FUD is done, they've finished up with the CFTC. And if we can kind of get the story along, moving to the next topic. Naomi, I'll throw it down to you, though.
Yeah, this is kind of an interesting story because it's very rare for me to say this, but it's kind of an area where you do want some sort of recourse or protection against companies if they are fraudulently putting on their website that something is, A, and then it ends up being B. Then you need some recourse as a consumer. Obviously, I have my ideas about how in an ideal society that would be managed, but in this instance, we have the Commodities Future Trading Commission kind of pushing back and charging them. And I mean, if they're fraudulently representing what their product is, it's not that at all. If they're saying that this is fully backed and it actually wasn't, well, it seems legitimate that consumers would want some recourse in that. Now, none of this is going to consumers. There's just a bunch of money that keeps going to these agencies. But it is interesting that that these findings are now, they're pushed back against Tether and Bitfinex, and now everything's kind of been wound up on this side. They've changed their language since then. They've made it a lot less strong, where they've said, yeah, we're backing it by some things. It's backed by there's a bunch of stuff there. And it's like, okay, so it's like, we've got a bunch of debt instruments and whatever, and that's the way that most stable coins are backed these days. But at least that's accurately represented, and now consumers can make a well-informed decision about whether this is a product that they want to get involved with. But I'll throw it to you, Jen, for your thoughts.
You kind of answered my question. You're like one step ahead of me today. I was going to say, so Tether's been fined now. The CFTC says one thing. Tether's gone back and said another thing, pretty much opposite. It's like, it is fully backed. It's not fully backed. They've been fined. But now what happens? They just change their messaging and continue on as normal. Is there no further recourse?
Well, there shouldn't be any further recourse. I mean, there's no reason for anything punitive because... Well, as long as consumers know what they're getting, that is that transparency that's important. So they were fined as sort of retribution for lying on the website, for fraudulent representation of their product, and now they can move on as long as they're not still fraudulently representing it. There's no reason why they can't accurately represent it, and then consumers still get involved with this.
Yeah, I think the big picture for me here is it's easy to claim transparency and not do anything about it. And I think for a long time that had been the case here. And I think to your point, Naomi, you're right. There needs to be some accountability for that. That's what these technologies, these blockchain technologies represent, is sort of transparency and accountability in code. But that wasn't the case here with a private company operating at a remove from some of these blockchain systems. So for them to sort of be brought into line could be one way to look at it. Ready to look to the future is how they're sort of spinning this. It's going to be interesting to see if this allays any of the doubts of many people in the market who really do wonder if this is a systemic risk to this becoming a bigger part of the world's financial system. So interesting to see this settlement for sure. But Naomi, I saw your hand go up. I want to throw it back to you.
Yeah, like these centralized stablecoins are really interesting because there is an element of trust that is needed at the point of issue for all of them. It's not just Tether, it's any one of these companies that's issuing these stablecoins. The reason being is that they're not minting one of these coins in a transparent way every time someone puts money into Tether. They're not like people don't send them US dollars and then they mint a coin and send it. The transaction fees would be astronomical. They mint them all in advance so they have a liquidity pool that's available so that people can buy in. And you kind of got to trust, that they're minting the right amount, like that the money's going in, and who can audit the amount of money going in? Well, you got to know which bank accounts it's going into. And well, this stuff isn't public because that'd be a major security risk. And so then they have third-party auditors come in and say, yeah, we saw the amount of money going in. This is all above board. But there's a real big element of trust there with all of them to actually say, yes, the amount of money going in is the amount that we are printing, which has been the contentious issue all along. And it's why a lot of people prefer decentralized stablecoins like MakerDAO, DAI. The fact that it's all completely transparent, auditable on the blockchain, that is such an improvement over these opaque centralized systems. And it's why people are so excited about DeFi. And it's why people are saying, we don't need regulation in this side of things because the code does it all for you. Consumers can literally see transparently what money is going in and what money is going out. Regulation on the other side kind of makes sense if you have an opaque centralized system. But when all of this stuff is out in the open and there's no central company who could be hiding anything behind the scenes, that regulation doesn't really make much sense. So the fact that you have Gensler coming along and saying, well, we're going to shoehorn these DeFi systems into our regulatory model, it's like, to what end? Why do we need it? It just seems like a power grab more than anything. But Zach, I saw your hand go up. I'll throw it to you.
Yeah, I'm really glad you brought up DAI. There was a really fantastic piece by Andrew Thurman on CoinDesk.com yesterday about DeFi's top unofficial lobbyist, and this is he operates under a pseudonym and he meets with various lawmakers and officials around the world actually. And one of the interesting nuggets in that story actually was that in terms of sort of crypto awareness among US lawmakers, it really is Bitcoin and Tether. Those are the two crypto assets that people are familiar with. And part of this guy's job as sort of this DeFi delegate in the halls of power is sort of being able to explain the differences between a stablecoin like DAI and a stablecoin like USDC or USDT and why those are different animals altogether. But it speaks to the awareness, I thought, of sort of the public perception of Tether as being this sort of dicey thing that no one is quite all the way sure about. And people keep discovering the same things over and over as they enter this space and talk about some of these same lingering questions. So if this settlement is able to allay some of those doubts or answer some of those lingering questions, it may be a good thing for the industry going forward. Whether or not we'll see a full telling of what occurred in the past, I think that ship may have sailed. But it's interesting to see action against Tether take place in a pretty pronounced fashion here today. So we're going to wrap that there. I'm going to toss it to our SHIB Army representative, Jen.
SHIB I will forever be known as the SHIB Army representative. All right. The self-proclaimed Dogecoin killer has been more resilient than most could have predicted. So after a big dumping event last week, the coin rebounded 40%. In CoinDesk reporters Muyao Shen. Is that how I pronounce her name? Please correct me.
It's Muyao.
Okay. Muyao Shen's analysis of the event. She unpacks just how strong a united community of individual investors can be. So I'm going to kick this down to Will first. Will, what did you think of this rebound after Thursday's big dump?
I'm just really impressed with the photos CoinDesk is pulling up of these new dogs. I think when we first started getting to the Doge era, that the photos, they were okay. We had some good ones, and they were being repetitive because we had a news story every week as Elon was tweeting. This is good. This is good content right there. I want to click on that article. Just to talk about. You're welcome. You're welcome. Zach told me to say that on the show today. Just looking at the tokens themselves, though. Meme speculation always pops around again once Bitcoin's price goes up. So it's not super surprising to me to see that happen. What is surprising is to see some of these tokens that were really kind of lost in the fervor and the bubble of the moment in the spring kind of have resilience going into the fall and into the winter. And some of those tokens stay around. Like Dogecoin is an old joke coin from years ago, and somehow it's managed to stay alive. So the question now for me is, are we seeing that here with Shiba Inu and some other tokens? Like, are they going to be the meme coins that are going to have longevity? kind of had that Lindy effect everyone likes to talk about, and this stays around for a few years. And in 5 years from now, another Bitcoin bull cycle, we're talking about Shiba Inu again. That's my only thoughts. Zach, I'll kick it up to you.
Yeah, I mean, I was just looking at, I edited this piece and was just looking at some of the data that Muyao is really great at assembling. And, we talk about pump and dump in meme coin land. And when you look at the chart, you're like, wait, where's the dump? I've seen that there's the pumps, and then there's sort of these selling events, these like little dumps, but then it just kind of keeps going back up. And so it's kind of interesting to if you poll sort of blockchain data firms and you ask around like what's going on, it is again just this this army of small holders who are sort of keeping this thing going afloat. I mean, it's really funny to think in these terms because like the price of Shiba is so small that if you have like 1 million Shiba, you have like $27, like last time I checked. Yeah. So there's the ability to sort of like cosplay as a whale because the numbers are so large, even though the dollar value is so small. Mm-hmm. So, it's funny, like looking at this piece and reading this piece and thinking of a small holder as someone who has 10 million SHIB as opposed to, the whales who really, according to blockchain data, haven't really done anything with their SHIB holdings. So I don't know. It's interesting. It's this one just was interesting to me because I don't know. I kept expecting there to be some. We always caution people like the every
educate
rise
yourself.
It's gonna come happening. With a commensurate fall, and like you're gonna be in pain, and like don't buy the hype. And as yet, we have yet to see there's that pain.
Hype. It's real.
There's all hype, but there has been minimal pain. And so maybe the pain will be really bad at some point. But for now, we have yet to see it if you look at the chart. So I don't know. It's just interesting to watch this one unfold.
I want to quickly, Naomi, before I toss it down to you, bring up Shiba Swap. So I didn't know that Shiba Swap had so many features: swapping, staking, farming, and NFTs. And so I just think about this community that's formed around this cute dog meme, and it just speaks to how awesome the crypto space is. Just like so many awesome financial products, giving back to the community, and there's this awesome online community that's formed around it. But Naomi, I'll pass it off to you for final thoughts.
Yeah, I was just kind of thinking this morning about how remarkable it is to see so much tribal around different currencies. I would never have expected that 10 years ago, that one day we would have all of these tribes around money and the currency that they're using. Because like you wouldn't see people being like, yen is the greatest. I'm part of Team Yen. Let's make sure that the yen goes up in value. It like just doesn't happen. But now with cryptocurrency, people are fully into that, right? And we've had tribalism in all other areas of life. You have it in religion, and then you have it in sports, and you have it in politics. My goodness, do we have it in politics? It never occurred to me this would be something we would see in currency. And it's fascinating to watch this evolve and see all of these niche communities pop up that are just such adamant, fervent supporters of a certain type of money. And it's like when you look at kind of books like Neil Stephenson's Diamond Age, where he's kind of looking at this anarchist society of the future where cryptocurrency takes over. And this is a book he wrote decades before cryptocurrency was a thing, before Bitcoin was invented. And he's talking about, these files that emerge, these different tribes that people associate with, whether it's like the Mouse Army or whether you're part of the Vikis or whatever. And like even like people like him didn't even predict that it would all formulate around the type of currency that you're using. Like, I don't know. I just think this is such a fascinating evolution that I definitely didn't predict. I don't know if anyone predicted it. And it's really interesting to watch it play out, to see communities like this form and like support coins or whatever, because they feel so strongly about that particular type of money. Just very interesting. But Zach, I'm going to throw it to you for wrap.
All right, I'll wrap it up. Let's wrap this thing. Good work, everybody. Thanks for tuning into the Hash today. It's been a fun Friday show. We're going to take it easy for the weekend. It's not going to be a 23-hour, 30-minute break anymore. I can't do that math.
Do the math,
Zach. Do it.
Come on, tell us. How long are we on break for? 72 hours.
Minus an hour and a half. I don't know. I'm too stupid. But anyway, we're going to do that. We're going to recharge. We're going to come back with hyper math skills, and the brain is going to be firing on all cylinders. We'll be back on Monday, same time, same place, getting you caught up on all that's happening in the world of crypto. I'm Zach Seward. Down here, we got Will Foxley. We got Jen Sanasi over there. My fingers are off. Jen Sanasi over here. Naomi Rockwell over here. We've been doing it like a year. I'm still figuring it out. It's going to be great. Stick with us on CoinDesk.com, and as always, check out CoinDesk TV at 3 p.m. Eastern for all about Bitcoin. Hey, thanks so much, guys. Fun hanging with you this week, and we'll see you all on the flip side. All right.
On the flip
See
side.
ya.
Have a good weekend.
Bye. I'm just going to shimmy. Let's shimmy out of this.